National credit rating agencies like Moody's, Fitch and Standard & Poor have often been accused of bias and being harsh on African countries. This has prompted African leaders to call for Africa's own credit rating agency to be established. Well, the African Peer Review Mechanism, APRM, has now finally kick-started the process of designing a legal and structural framework for the establishment of the agency. And it will be an independent entity of the African Union. Well, to discuss further, I'm joined now by the APRM's lead expert on that subject, Misheck Mutize. Thank you, Dr. Mutize, for joining me. So before we get into the background that led to where we are, let's first establish where exactly we are. Is this still exploratory in the realm of an idea about the possible establishment of an African credit rating agency, or are we now at a point where rubber meets the road, the processes are being set in motion towards that establishment?
Indeed, I think it's more of the latter, because this resolution has already been undertaken that the path should be to establish that institution as an entity of the African Union. So where we are now is to explore where this institution will be located, in which member states on the continent, and also what will be the legal modalities of such an institution. But all that, at face value, it has already been agreed that this is the path that we are going to follow. So the concrete position on the legal, institutional and financial implications of this will be agreed at the ministers' meetings that will undertake, that will take place sometime later this year, possibly in June.
Are we at a point where we are able to talk about timelines, or is it still premature to be talking about that?
It could be a bit premature, because the plan that was initially, or the roadmap that was initially put in place, was hugely derailed because of COVID. So the issue of establishing new institutions under the African Union has been a bit delayed, or we may say it has been put on pause at the moment. So only at this point in time, that's when the conversation has been picked up to explore this, or to take this mandate further.
Yeah, and Dr. Mutize, it's not to flatter you when I say you are the right person to be having this conversation with, because you've done extensive work around this area of credit rating agencies and their interactions with the African continent. And last year you had a paper out with McBride Peter Nkalamba, and it was entitled International Credit Rating Agencies in Africa, Perceptions, Trends and Challenges. I imagine that this conversation about establishing an African credit rating agency is grounded in a need that has been identified, and a gap, I suppose, that has been identified in the work that is being done by the three main credit rating agencies. In a nutshell, from the work that you have done, what's lacking?
Thank you very much for the generous comment and compliment. Yes, you know, for a start, when we started this conversation that there are issues that rating agencies are involved in, the knee-jerk response that we faced was a bit, you know, of a resistance from both governments and, you know, some analysts, including the rating agencies themselves, that we are, you know, tapping into a space that, you know, that has already been established with so many systems that are already hardwired, that cannot be easily be changed. But I'm happy that as the conversation went on and up to where we are now, we have been able to engage rating agencies, and they themselves also are willing to engage us on a very frank and objective, approach, to the extent that even the most recent acquisition of Moody's, of the global rating agency, when we raised some concern, they were free enough to engage us and raising some assurances that this is not going to encroach into the business of the African rating agencies they were acquiring. So coming to your question of what has been lacking is, of course, in the area of sovereign credit ratings, which is the ratings of governments and the ratings of government instruments, that has been predominantly occupied by the international rating agencies themselves. But there is still, in Africa, about 40% of the countries that are not rated by any of the big three, which is a niche in itself. And also coming down to corporates, municipalities, and other financial instruments that trade on the domestic markets of various countries. Those are predominantly not rated at all. So that's a niche that any rating agencies that wish to tap into that space is open to make very good business, because the drive now at the moment is to support the development of domestic markets, which rating agencies themselves that we have at the moment are not very much enmeshed in that space. That's why we are talking about supporting more, locally based rating agencies.
But I suppose the question I was asking has to do more with the practices of the current rating agencies that you speak to in the paper that I alluded to a bit earlier on. Your concerns about how, there doesn't seem to be consistency and the revision of the ratings of African countries being less than satisfactory. The example being, you've been monitoring, for instance, when the rating came out around the outlook around the Egyptian economy in October last year, but also more concerningly for me as I read your paper, your argument that the policies that are preferred by rating agencies end up being the policies that countries seeking a positive rating end up having to adopt, which you're saying, chips away at the sovereignty of countries.
Yeah, absolutely. I think you have read the paper very well, and I'm pleased to say, indeed, that's one of the areas that we have strongly pointed out in our arguments or observations of the inclination of rating agencies and the reports they issue now and again, that their inclination is towards, contractionary or restrictive monetary and fiscal policy, which is not usually the case. And that does not align well with Africa's developing economy, which was also the case when COVID came, that they were really pointing out the issue of, rising debt and all the factors that aligns to expansionary policy. So that has been a major issue, because for developing economies, they cannot always abide or align to the contractionary policy stance, which might not be in the best interest of the developments in the local economy. But also suffice to say that at various points we have raised several issues, including the inconsistencies of their position in that policy stance. The most recent one, which is the case of Ghana, where we also issued a very objective statements on some inaccuracies that they had presented in the reports that analyzed the downgrade action in Ghana. So we reached out to the analysts that was involved in that, and to some extent we feel that they also acknowledged those inaccuracies and shortcomings that are involved in work they are doing.
All right, Dr. Misheck Mutize, let's leave it there for now. I do imagine that this is a conversation that we will continue to have going forward as this proposed continental African credit rating agency begins to take shape. Joining us there from Dakar in Senegal, that is Dr. Misheck Mutize. Yeah, you should read the paper. Look out for it that I mentioned by Dr. Mutize and McBride Peter Nkalamba, International Credit Rating Agencies in Africa. It came out last year. It's quite fascinating, their assessment and critique of the work of rating agencies on the continent.